Well, MEPS International Steel Market Analyst Stuart Gray, Jon Carruthers-Green, welcome back for another episode of Speaking of Steel, our first of 2025. We're here to discuss Germany, the economic situation in Germany, and really the influence that's having on the wider European steel sector. So plenty to go at. I mean, I guess there's already been a bit of a slowdown in Germany prior to this economic situation we've seen, Jon, but that's kind of exacerbating it. You know, what's been the run up to where we are now
So I,
in
I
this
think
slight
there's
stalemate?
I think there's factors that are sort of particular to Germany, but then there are also factors that are European-wide, global-wide when it comes to the steel industry. I don't think there's any getting past the issues that we've got in Asia, sort of the oversupply that's coming from China in particular, but now from a whole bunch of other countries. We're looking at sort of that material first of all, perhaps going to some other country in Asia, and then into Europe, and then into Germany, with the intention of bypassing sort of any kind of trade defence, any kind of barriers like that. Then we've got issues that are, say, European-wide, so the decarbonisation of the steel industry. That's something that the EU's really sort of trying to press ahead with. And then, like I say, there's finally, let's get it down to just sort of Germany itself. And like Stuart said, there's a whole range of issues that are particular there. One thing that we do see, though, of course, Germany is such a large part of the European economy that whatever happens there is going to have effects elsewhere. When we sort of look at, say, what's happening in Italy, looking in what's happening in France, look at what's happening in Germany, due to sort of the way the market's sort of really sort of tightly integrated, we see that what happens in one tends to happen in the other. One thing I haven't even mentioned yet is the whole issues with Russia, and obviously with Germany being where they are in the well, first of all, geographically in Europe, but then secondly, sort of economically, and their dependence on the oil and the gas that was coming from there. That's caused them big problems, more than anybody else, really, in the EU. And it's going to take a good long while for this to be resolved.
Just 2 points there. So, in terms of the decarbonisation strategy in Germany, like everywhere else in Europe, steel producers already set out their strategy and got their funding right to carry out that program. I get the impression from our research partners when that topic comes up, even with the inclusion of CBAM next year, that at this stage there's hesitation when anybody mentions green steel, only for the fact that although their costs are high at the moment in terms of production, it's going to push up costs even further.
I think that's natural. I mean, It's only really within the EU that we're seeing this being sort of driven as a policy quite so hard and quite so fast. Of course, there's talks within other markets, so like in Canada, in California in particular, and a couple of other ones. There's always been talk. There's been legislation that's been sort of proposed, but the EU are really trying to drive this CBAM and the change to the ETS scheme really quite quickly. And the industry as a whole, it's going to take a long time for them to get from a position where this is sort of new and novel to something where it is potentially standard practice.
So if you look at CBAM and you look at, say, the imports and whoever is affected in terms of the CBAM, so do you think that will enhance, say, steel sales or demand within Germany as such? Will the market lean towards local producers, or will they migrate over? Will that CBAM surcharge, let's just say a surcharge, and it is the cross-border adjustment mechanism for those who don't know, but do you think that will push the German market leaning more towards local producers? From my perspective, from what I'm hearing from our research partners, it's a bit of a mixed bag. Some are looking at that and saying, well, they don't think it's going to have an effect as what local industry is led to believe in terms of what the powers may be that are pushing it. Others say, well, they're just going to import regardless. So I'm not too sure in terms of what that surcharge is, because there's different figures being banded around. I don't think it's been set yet, but do you think there will be that migration more towards domestic producers?
I think we're really going to find out in the next 12 months whether there is. The intention, though, is that the decarbonisation program are basically paid for via the ETS and the CBAM schemes. Will this change behaviour? I think ultimately it comes down to exactly what you said, cost. Because consumers, okay, they may be asking for greener products, but are they willing to pay for them? And it's only really if that demand comes from consumers that we'll actually see companies invest in these massive sums, because we're talking billions and billions to sort of change the way that they're producing the steel at the moment. And some of this is dependent on very untried and untested technology. I mean, there's talk now of introducing blast furnaces that can be powered purely by hydrogen. And first of all, where's that hydrogen going to come from? I mean, we've seen some investments into some infrastructure, but it's at such an early stage that I think it's going to take a long time before we see any meaningful development.
I think at the centre of what we're talking about today, though, in terms of German demand, is the case that the cost base of local manufacturers, local steel makers, is growing at a time when demand from key industries in Germany, in particular, is failing. I mean, I suspect automotive and construction are going to be central to that. What is it that's really depressed that German demand from the point of view of MEPS contacts?
Well, I think you've said it right there. I think the cost base is really a huge problem. You said it before with regards to the Ukrainian-Russian war. I mean, that immediately had an effect on Germany with regards to their energy costs. And you can see that, say, pre-COVID to now, gas prices have leapt up by 4 times. Electricity costs are now more than 2 times. So that's going to be a natural factor that increases the cost base. And then in terms of all the supply chain issues over COVID, after the Ukrainian-Russian war started back in February 2022, it also highlighted supply chain issues. There were shortages, you had spikes. With those spikes come uncertainty with regards to investment. You had a high inflation rate, high interest rate. So all these factors combine together with what's happening externally outside the EU. And whatever's felt within Germany, because they're intertwined, it reverberates right through the EU. And really, the EU really needs strong economies in both Germany, France, and Italy. Really needs that in order to go forward. But I just want to just come back to with regards to green initiatives and so forth. So if you cross over to the automotive sector, so if you look at last year's new passenger registrations, they were down 1% compared to 2023, okay, to about 2.8, just over 2.8 million new vehicle registrations. But I think the telling factor, if we want to bring stats up, is the decline of the electric vehicle proportion of their sales. That declined by 20%. Now that 20% will translate immediately over to steel consumption and demand. And from a steel producer's perspective, they like a very good anchor base on their production from the automotive sector, as well as the industrial. But really, the automotive sector is key.
And so that I think is where the cost comes back in. So once again, people have essentially said, I'd very much like to do these green things, but
Yes.
but when it comes to actually buying an electric vehicle, there's a premium that comes with that.
Yeah.
And we've got to the point now where there's all those early adopters, all those people that were very keen to do this, all those people that saw sort of the benefits of these changes in technology, they bought their vehicles. What hasn't really happened is it hasn't really sort of seeped through to sort of the average person on the street.
Yeah.
Like I say, everybody who desperately wanted one has gone and bought one, and now the struggle is to essentially get that mass market adoption. We haven't quite seen the sort of the numbers that they have sort of, certainly in China. There's been some sort of huge volumes of cars being produced,
And that's coming into the EU.
and a lot of those coming into the EU. Yeah, and one of the things that does have is it provides that extra competition that wasn't there, say 10 years ago. Just one of the points I'd just like to go back to is just about the German economy. When we look at the figures and sort of the expectations for growth over the next few years, and if you say compare them to France, to Italy, to other large economies in Europe, we're expecting that growth to be quite a lot smaller. In 2025, forecasts have been brought down again and again and again. And I think, depending on exactly who you speak to, we're looking at somewhere between sort of no growth next year. Sorry, this year now.
Yeah.
No growth this year, or sort of less than 0.5%. So that really sort of factors in. And then the other point about sort of construction and automotive industries. Not only are we expecting overall a poor German economy, but we're expecting these two industries to be some of the worst performing over the next couple of years. So it really is sort of worrying for that demand for steel products. I can see there's quite a lot of people going to be naturally worried, especially if we're talking about introducing these extra costs as well.
Yeah. And that comes out while talking to our research partners. I mean, if you look at their volumes, their month-to-month annual targets, I would say by far the majority of them, of the specific companies in all facets of the steel industry, are down. If you look at the capacity utilization of steel producers, it's reportedly around about the 60% mark. So the steel producers have already responded to the demand, or the decreasing demand. And that's highlighted in the Purchasing Managers Index, or the so-called PMIs, which surveys numerous companies in terms of their order intake, their inventory level, their confidence in terms of what's going to happen going forward. And just again, I mean, it's quite interesting. After the Ukrainian war started in March 2022, so that's a month after, the construction PMI was at 50.9, which indicates growth. If you look at the manufacturing PMI, it was also in growth of 52. Where are we today? Well, on the construction side, we're at 37.8, and on manufacturing, 42.5. But that's been like that for now well over 2.5 years, coming close to 3 years. The economy is not going to grow at those levels, and that just also gives an indication of the confidence in the market. There is some optimism, though, that if you look at the order intake in January that these various companies had, there was a slight uptick. But again, is that due to stock replenishment? Yes. Is that due to maybe new inquiries coming through? Absolutely. But in terms of full-fledged projects coming on board, infrastructure spend, which the annual budget proposed or provisional is set at 74 billion in terms of investment. There's hope that perhaps in the second part of this year, there could be some real growth. But again, it comes back, in my opinion, back to the political situation. If they can get that right and have less bureaucracy, that has come out a lot in our discussions. It takes so long to create, say, new business. There's such a lot of bureaucratic red tape to go through. Yes, you have to have some of that, but some of these can go on for years. So in terms of growth, they need to perhaps maybe simplify it. Maybe that's too of a simple word, but they really need to simplify it
So you mentioned a sort of a slight increase in orders
Yes.
compared to December. Is that sort of is a general feeling that that's more or less than we saw last year?
I would say on the same level as January last year.
Okay.
So it could be a historical trait. But again, there's been an uptick since, say, October, November, leading into December was half month anyway. But certainly, just from the feedback, there is a sense that there was a slight uptick. But whether that's still got steam to go ahead, we're not too sure yet.
I mean, we started out by talking about the effect on the wider European economy. I think I'm probably right in saying that in reading MEPS reports of recent months, German suppliers and distributors have been targeting other parts of Europe, Italy, France, other large steel consuming economies. Is that likely to be a trend that continues?
Yeah, I think it started a while ago. So you started steel producers. They have been traditionally offering into other markets. They have distribution centers around, or they deliver straight from their mill. But if you go a bit downstream, certainly if you talk to companies in the wider or outside of Germany, Central Europe, and even in the Western Europe and Southern Europe, you can see more and more companies that traditionally keep themselves within the German economy are venturing out. Yes, there's also exports into other countries outside the EU, but there is that feeling, and especially when you're in direct competition against, say, a company that normally trades within its own borders, definitely there are signs, and there's real signs of them venturing further out.
John, I mean, I know you've been looking at a lot of the price data from recent months. What effect, is all this having on German prices? And I guess, is there a sense that it's depressing prices elsewhere in Europe?
Yes, we've definitely seen sort of depressed prices through the past 12 months. We've also seen that, like you say, everywhere else in Europe. It's such a each one of these countries is so sort of closely joined by all being in the single market that essentially what happens in one, like you said earlier, is going to happen in another to an extent. So we've seen prices depressed sort of throughout 2024. This was after the big peaks that we saw 22 and then again in 2023. Our expectation, though, is that we are going to see some price rises. So our team of forecasters is expecting some increases, not just this month, but for the next few months before we start sort of perhaps seeing any pullback. Their concerns really are that first of all, steelmaker, everybody in the business is struggling with margins. So there's really very little room for prices to keep going down any further. There's also the potential talk for changes to the safeguard tariffs, which could potentially put a bit of a lid on the number of exports coming through. I mean, there's going to be an announcement before April with some new restrictions on that scheme, and while that's European wide, that's going to affect Germany, of course. So we're expecting sort of a slight rise over the next few months before those prices level off again.
So, I mean, we're talking about tariffs and things that are clearly going to affect Germany in the coming months. The elephant in the room, the invariable in all this, is seemingly in every story that we're telling through our MEPS reviews at the moment, is Donald Trump and the potential for tariffs on EU exports. Germany being Europe's biggest economy and a huge producer of steel is going to be massively affected, not just from a steel perspective, but other products as well. I mean, I'll come back to you, Stuart, but what are your contacts saying about the prospect of Trump tariffs on the EU?
Yeah, they're very concerned. Scary comes up a lot. I think just before I answer that question fully, in terms of what Donald Trump and the Republican Party are doing, from an outside observer, of course, is that the current news with regards to tariffs on China, well, that's set at 10%. If you look at Mexico and Canada at 25%, there's already been a reprieve of 30 days. So, you could argue that he's using that as a negotiating tool to have some balance in his favor. From an EU perspective, I think they could probably expect much of the same. I think the one thing, if you look at the EU, is in terms of what's been advertised in terms of their deficit, their trade deficit with the EU. And I think probably that's weighing heavily on German leaders and German citizens alike. In terms of pricing, okay, so John's right, the prices are suppressed. There's a new base cost. And if you just compare, say, pre-COVID to today, the lowest price pre-COVID was at 470 euros per ton. If you look today, in the region of 560, the mills want to escalate that up, want to push it up. You're right, there is a tendency that the prices will increase, and we do expect those prices to increase. But those two black swan events, if you look at COVID, it pushed the price up to 1150 euros a ton. And on the onset of the Ukrainian-Russia war, it pushed up to 1350 basis price per ton in those two. And it actually lasted for a little while at those elevated prices. But after that, and there were a couple of spikes in 2023 and 2024, but today it's been hovering at very low levels, and the mills can't sustain that. And you saw that in the annual contracts, especially with the automotive guys and also the larger industrial users. If you take from Euroblack in October, or was it the Black Expo? Okay, but anyway, the annual event normally kicks off and starts off the annual contract negotiation. It really didn't happen that way this year, or last year, should I say, in October. And the mills were notably absent from the negotiating table for a good couple of months. There are some negotiations even happening today, but by far and large, the majority was done at the 11th hour. And just to give how far away the steel producers and the industry were, steel producers were offering in the region of, say, 40 to 50 euros a ton decrease from the previous 2024 annual contracts. And what the end users really wanted was between, say, 130 and 150 euros a ton decrease. They did settle between, say, 70 and 100 euros. But I think the expectation of, in terms of the steel producers now, since they've concluded those contracts or their annual contracts for their baseload, is to now push those prices up further. Now, that's going to be difficult for them because demand is naturally down. How are they going to do that? Well, are they going to cut capacity utilization or production output more? Is the new government that's going to be elected after the 23rd of this month, is that going to introduce a new sense of optimism and drive in terms of the economy? Is that going to take the whole of the EU? Those are questions that still got to be answered. So I think it's going to be a very, very difficult and tough ride for most companies in Germany.
Yeah,
still.
Yeah, absolutely. John, I mean, I do want to return back to the big point about Trump's tariffs, I suppose, and the German market dependence to some degree on exports to the US. What will the loss of that outlet do? I guess there's a risk of overcapacity.
Of course. So, as I mentioned before, with a lot of things that were affecting the price on the way down, and then pushing back up in this first couple of months, were really sort of supply issues. So there was the steelmakers' margins now being sort of squeezed so thin that we're looking at some of the larger players actually trying to cut capacity. So ThyssenKrupp's probably the big announcement we had in the past couple of months about them shedding jobs and cutting capacity. But the other side of it, of course, is until this demand comes back, there's only so much that this kind of thing can push up prices. So then we add in some Donald Trump into the mix and all the uncertainty that he brings, and you've got to wonder, for this very sort of fragile economy now, is this another one of those black swan events? Is this another one of those sort of big tipping points? We'll see. But I think Donald Trump's out for one thing and one thing only. That's for the USA and for the American economy, and that's exactly his job. So that's entirely to be expected. What the reaction's going to be from leaders in Germany and in the EU, we're still sort of very unsure. There's been some talk already, but talk and not action. Whereas they're playing a game against somebody who's action and talk. So it could be very difficult for them.
And a very fluid situation. I know from our coverage already, things can move so quickly with Donald Trump that it's hard to keep.
I had to rewrite a few articles in the past couple of days.
Absolutely, and there's a concern that the podcast might go that way if we don't stop talking about him now as well.
I think just coming back to where demand could come from. Well, in terms of not strictly demand, but maybe from a capacity point of view, if you look at imports of last year, just below the 16 million ton mark, maybe the steel producers are eyeing that to try and take some of that back with the new tariffs and quotas from the 1st of April from a EU point of view coming into play or being announced. So that could be something that they could gain something from in terms of volume. So yeah, it will be interesting to see how the market reacts to that and how the steel producers will react.
Right, so we'll certainly be keeping a close eye on it from a MEPS research perspective, and we've managed to dig a few positives out there. There are a few scenarios where demand might increase, and we're already predicting that prices will. So we'll see where that goes. Stuart, John, thanks ever so much for joining me on Speaking of Steel.
Thanks,
once again.
Tom.
Really good podcast. Plenty to talk about today.
Fantastic.
Great stuff. Thanks, guys.
Thanks.